All right, welcome back into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Happy to be here. Hopefully you are too. Why don't we go through some of these prices? I just got the baton from Mr. Tony St. James. This is the second half of the show, so we're halfway through these markets. Why don't we see how we stand right now? Let's go to a corn board, and that'll show us that we're, I don't know. We can't get too excited about this, but we haven't really stopped the slide, if you ask me. We're down a half cent in March to 4.79 and a quarter. May comes in sharply unchanged at 4.94 and a quarter. July also sharply unchanged at 4.99 and a quarter. SEP and DEES are both lower, 3 cents lower in SEP and DEES. The new crop down 2.5 cents to 4.67 and a half. So that's kind of I don't like that. We need a balance. That's what I'm looking for here, folks. Soybeans, they're even lower again here. 7 cents lower in March to 10.24 and a quarter. Boy, is 10 bucks in play here? I don't know. I don't like the way that looks either. July is down 7.5 cents to 10.56 even. And let's go out to the SEP. That's 6.5 cents lower to 10.41 and a half. All right, wheat in Chicago wheat. That's down between 7 and a quarter to 8 and 3/4 cents, with most of the bigger losses coming out the back at the deferreds. March is down 7 and a quarter cents up front. 5.65 and a half is last. Just penny and 3/4 off the low of the day. We've had, I don't know, I'm gonna call that a 14-cent range. July's down 8 and a quarter cents to 5.94. We're DEES Chicago wheat. Well, that's down 8 and 3/4 cents to 6.28, even a penny and 3/4 off the low there as well. From Chicago, we go to the Kansas City hard red. That's down 8 and a quarter up front. The March contract stands at 5.83 and a half. 8 cents lower in the July, the belly of the curve there. 6.10 and a half is last. And if you go all the way out to DEES, that's down 7.5 cents to 6.43 and a quarter. So another, I don't know, 7.5 to 8 and a quarter cent lower board when we talk about hard red wheat in Kansas City. Spring wheat in Minneapolis, that's a little worse. 11 and a quarter cents lower in the March to 6.01 and 3/4 right now. We briefly lost that 6 handle there, folks. 5.99 and 3/4 was the low. We bounced 2 cents off of it right now. July's down 8 and 3/4 cents to 6.33 and a half, and the DEES is down 6 and 3/4 cents to 6.61 and a half. Let's take a look at cotton, and we'll get to our next guest analyst. Let's go. Cotton's doing nothing here today. We're down 1 point in March to 65.95, but we got to get this going, folks. This is just not high enough. May's down 31 points to 67.06. All right, it's time to bring him in. Mr. Riley Schwieger. He's with he's up in Ember Grove Heights with CHS. What's happening? You're going to give us some energies. I'm going to pull up an energy thing, but I think this is really key going forward for this administration. What say you?
Yeah, well, obviously you showed a lot of red on the screen there in the grain markets, and lucky for me, when we're talking about lower energy prices, at least from a producer standpoint, that's good news. So it's been a bearish week for energies. We've got crude down today. Diesel is leading the complex lower, facing some additional pressure from a surprise build in inventories this week. But really the breakout move lower this week came after that consumer confidence report yesterday. Obviously, energies are going to be very sensitive to what's going on and some of the economic pressures that we may be facing this year. And when we saw that print that came in below almost all the industry estimates, we really sent prices lower. You've got crude below 70 for the first time since December. We've got diesel breaking out below some key technical levels, and then gas falling below $2 there. So, the market's trying to hold that today. It found reinforcement from the inventories last week. Like I mentioned, that diesel print was unexpected. We were looking for a draw there, a little bit of a counter-seasonal move higher in refinery rates. Crack spreads certainly subject to the weakness today with crude hanging in there. But a very delicate situation moving forward. And obviously with looking ahead, we've got tariffs looming on Canada and Mexico scheduled for March 4th. That's going to come quickly. A lot of uncertainty on whether that will happen or not, but certainly going to impact fuel prices here in the Midwest either way.
All right. Well, so I've been saying for a while now, one of the easiest ways to get this country back on track is $60 oil, maybe $50 oil, if I could, if I could dream a little bit. Does that have the chance of happening? I mean, because that is one of the, President Trump wants to bring down prices. One of the easiest and best ways to do that is through energy, but it seems kind of stubborn, if you ask me.
I think it's going to be stubborn. I think, especially with trying to drill and produce more oil is a key component here. If you're putting tariffs on something like steel, that's a pretty key input cost for oil producers. So for an increase in production, if that's the way that prices are going to find pressure, the cost side is going to have to probably find some relief. So I would keep a close eye on how these tariffs, well, kind of what they get implemented on, and then how long they stay implemented, because it's just going to be a really key variable as we look ahead.
Right. Okay. Great stuff as usual. Really appreciate you coming on. Perfect timing, Riley. We've been talking a lot about this subject as of late. Riley Schwieger, he's at CHS up in Inver Grove Heights. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with me in a livestock check right after this.